All right, guys, welcome to the video. In this video, we're going to put it all together. All right, we're going to put it all together and give you a full trade example. All right, starting off with analysis. All right, and then trade setup. All right, so how do we take everything we just learned? How do we analyze the charts? All right, and then how do we what? How do we then go from there and take this to the next level? All right, how do we take it to the next level? All right, which is setting up the trade and then executing the trade. So let's add it in as a trade setup and then trade execution. All right. All right. So first thing first, we're going to analyze the chart. All right. So for me, I analyze the chart. All right. Uh, to figure out my trade setup, and then for my trade setup, I then wait for the entry and I execute. All right. And there's 4 steps to this. 4 steps. All right. So let's slide this over here, and we'll talk about step number 1. And then we'll go 2, 3, 4. So step number 1 is finding your direction. All right. Step number 2 is identifying if we're looking for a reversal, all right, or a continuation. All right. Step number 3, all right, is looking for our potential entry. And then step number 4 is looking for our take profit levels. All right. Those are the 4. All right. Those are the 4. So let's start off here. All right. First things first is looking for the direction. All right. So we see price here moving. All right. Moving up. You see here, you got your low, price pushed up at a high here. All right. You got a lower high here. Price pushes up. You got a higher high here and here. Right here. He's right here. Price pull back. You got a what? Lower high. You got a higher high. All right. Now, right here, you had a change of character. The last bearish candle before price broke structure right there, we closed below it. But then immediately, we pushed back above it, breaking that, making a new higher high. All right. So that was a fake out right there. All right. That was a fake out. All right. Well, as we're looking at it here, we're marking everything up here. And we can see here that this right here is the last bearish candle before we broke up and broke structure and made a new high. We had a break of structure right there. This is the last bearish candle. So when we close below that bearish candle, you see we closed below it. This candle pulled back to retest and then it dropped. All right. So at this point right here, we had our last change of character. We had our last change of character right there. Our last change of character. All right. So now the direction is what? That was a bearish change of character right there. All right. That's a bearish change of character. And you see we dropped. All right. We pulled back and we dropped again. Pulled back and we dropped again. So we're going to be looking at trading this day right here. All right. Look at trading that day. That day would have been Friday, March the 21st. So we're going to look at the trade setup for March the 21st. Right now, we understand that our direction is in a sell direction. All right. All based off of understanding market structure and understanding what change of character is. We identified our last change of character. We had one right here. Then it made a bullish change of character right here when we broke this higher high. But then it came back and made a bearish change of character. Came back to this order block, pulled back, and then dropped again. All right. And then dropped again. And you can see here, let me clear it up, that you had a continuation in your change of character. So you had a change of character here. That's the first to the downside, first break of structure. But then look at this here. Bearish candle here before we broke higher structure there. Let's draw a line, and you can see we closed below that as well. So we had a change of character where it closed below a bearish candle that made a new high. All right, that's the first change of character. All right, that's the change. We drop down, pull back, boom, and we close below this order block here. Last bearish candle that made what? A break of structure right there. All right, so we continuing to close below bearish candles that led to price making bullish breaks of structure. So we're closing below candles that led to bullish trends or bullish moves were closing below them, identifying that we want to what? We want to go lower. That right there, this wick right here, we wicked it right there. We weren't ready. But when price came back and closed below that candle here, all right, now that's the signal letting us know going into the next day, we're going lower. So all you have to do is wait for a setup. All right, so now we've identified, all right, with understanding market structure, we've identified that our trend is sell. So now we go and identify, all right, our areas of where we can sell back, where sell from to. All right, are we gonna 8 o'clock is this candle here. All right, this is the 8 o'clock candle here on the 1 hour. All right, so we're gonna pull this over here like so, and we'll put this right here. I guess that's fine. We're gonna go back until the candle before. Boom, boom, boom. We'll go back to the 7 o'clock candle, and we'll identify. All right, we'll identify the trade setup for the day. All right, so there's multiple areas. You can see where we're at right now. We've come to, again, I always do my analysis on the 1 hour. All right, on the 1 hour and then the 15-minute. And then I look to take entries on the 1, 3, or the 5. This is gold, so we can go down as low as the 1 or the 3, what I recommend for gold. But you can see here, we've consistently come to this fair value gap. All right, that's twice we come to this fair value gap right here. All right, the only other area that I could consider us going is this green candle here. That is the bullish candle that, before we went down and closed below this candle. So that's the last bullish candle before we dropped. All right, so these are the two areas that I would want us to see us come to. If we close above this green candle, that is now a change of character back into the bullish side. So that's why, all right, we look at these two areas: fair value gap here, or this last bullish candle, which is an order block that led to price closing below the low of this candle right here. All right, so these two areas I want to see us reject from. All right, so we got that set up. Now let's go down to the 15-minute time frame and do some analysis as well. All right, we got the software on, letting us know where everything is at. All right, and well, I'll be a monkey's uncle. All right, let's go ahead and let's make this a different color so we can see the difference. All right, we'll make it sky blue, but you can see behind it. You can see behind it. Look at this bullish order block. We closed below it. It now changed into a bearish breaker. So now inside where you see here 1, 2, 3 rejections inside of this 1 hour fair value gap that are coming at the EQ, the equilibrium, the middle, the 50% of this bearish breaker. All right, so this identifies what? This identifies with our overall analysis on the direction. All right, so now we're getting rejections at a bearish fair value gap, that 1 hour fair value gap. We're getting rejections. We're also getting bearish rejections at a 15-minute bearish breaker. All right, before we set up, for our trade. All right, so it's good signs right there. That's good signs. All right, so let's go down to the 5-minute time frame, and we'll take a look here. All right, take a look here. All right, cool thing here. Cool thing. Number one, we have swept the liquidity. So one thing I love here is we have swept the liquidity from London session. All right, so we've swept the liquidity from London session. All right, and so now, all right, we've identified our potential trade. Let's go back to the 15-minute time frame so we can see the steps here. There they are. Reversal. So now we're definitely looking for continuation. All right, we had price close lower. We had a pullback, and now we're looking for what? I'm expecting continuation on this trade. Yes, we've already seen the trade, but I'm expecting continuation because guess what? The trend has already been identified as a sell. All right. We see here multiple rejections at the high, at the 1 hour, which is this baby blue square. That's the 1 hour fair value gap. That's a bearish fair value gap. And then we also have a bearish 15-minute breaker here. So we have two overlapping time frames that we're rejecting at that are bearish. All right, so I'm expecting a continuation, not a reversal. I'm expecting a continuation because of three things, I'm sorry. Number one, we swept the buy side. We swept the high of London session. Typically, when you sweep buy side, you look for price to go and trend down to then take out sell side. We took out the buy side of buy side liquidity. We swept the buy side liquidity, or price has taken out the buy side liquidity of London session. That's number one. Number two, you can see here multiple wick rejections at the 1 hour bearish fair value gap and the 15-minute bearish breaker. All right, so those are three identifying key points there. And so now it's just a matter of time. Now wait until our time to find our setup. All right, come down to the 5-minute time frame. All right, come down to the 5-minute time frame. You can see here this is 7:55, so we're getting ready to go into 8 o'clock. All right, getting ready to go into 8 o'clock. All right, let me change this here to slow the speed down so you can see this thing play out. All right, boom, there's 8 o'clock. So you can see we've now started New York session. All right. All right, boom. So let's go ahead and talk about this here. All right. Before let's actually go back a little bit here. All right, let's go back before 8 o'clock. All right, and let's go look at a potential entry here. And you can see here our entry. All right, you can see here this candle here had the first rejection, then you close below it. We came back up, all right, to retest the high, drop, push back up to retest this fair value gap and that 15-minute breaker. And then this is the last candle right here. All right, we closed below it. So we had a way. After we swept liquidity, going into New York session, the best time of the day to trade, 8 to 10 a.m. Central Standard Time, we had a change of character. We had a change in the state of delivery right here. We had a bearish CSD. We had a bearish CSD. So that tells me what? We had a bearish CSD, all right? Had a bearish CSD. All right, let's go down to the 3-minute time frame and see if we get a better entry there, all right? Even on a 3-minute time frame, we had a 3-minute CSD right there, all right? Actually, we had it up here. All right, 3-minute CSD. So this candle had a change in state delivery of this candle right before the market opened. All right, so two things I'm going to want to do. Number one, I'm looking for my entry. All right, I can put an entry here right when it had the CSD. All right, that's the first entry. If you don't want to wait for the pullback. All right, and you'll learn more as you trade a certain asset class. All right, either you'll get in and not wait for the the pullback, or you will. So you see here, this was the CSD. This candle didn't close below. It closed like right at the low. This candle closed below that candle going into 8 o'clock. All right, so we had a CSD here. So you put your entry there, or you can wait for the pullback for it to retest this candle that it had to change instead of delivery. So those are the two areas that I would look at for an entry. Now, for a stop loss, I go back to that 15-minute time frame. All right, I like to use 15-minute time frames for my stop losses. You see the bearish breaker right here. All right, I will put my stop loss just above this bearish breaker. That's where I put my stop loss at. All right, boom, like so. So let's come back down here to the 3-minute time frame. Like I said, the 1 and the 3 I recommend for gold. All right, and now let's go target liquidity. All right, so from a TP standpoint, all right, there's going to be two areas of liquidity that I would look at. Number one area is going to be the low of London session. Low of London session. We already took the high of London session, all right, which came into an area and rejected the area multiple times, showing us what? A continuation of the overall trend, which is a sell trend. All right, so we swept buy side liquidity. Now we should be aiming for sell side liquidity. All right, and then TP number 2 would be what? The low of the day. That's the next area. So those are my two areas that I should be looking for. All right, so that's how you frame your entries, your stop loss. All right, and you take profits. All right, take profits all based off of what? Liquidity areas. All right, low of the day, low of London session. Entries are 3-minute CSD, or we wait for price to pull back to the candle that was CSD for the retest. And our stop loss go to a higher time frame area that we're rejecting, which is that 15-minute breaker. I usually use I like to see an overlap of an hour time frame and a 15-minute time frame overlap for a rejection. And I use the 15-minute as an area where to put my stop loss at. And you see is right there. So let's say we look for a retest here, and boom, stop loss is perfect right there. That's a 32.9 call, 33 pip stop loss. All right. Take profit number one is the low of London session. That's 86.7 pips. So you can see here, risk to reward ratio 2.64. So that's a 1 to 2.64 risk to reward. And then TP number two would be the low of the day, which you can see is a 1 to 4.32 risk to reward. All great trade setups. All right, all best. Now, if you took the trade directly after the CSD, boom. You know, this setup would be the full trade all the way to the low of the day would be 1 to 2.43. And then if you took it just to the low of London session, it'd be a 1 to 1.33. All right. Remember, I always recommend at least a 1 to 2. All right. So sometimes waiting for that pullback is going to be key. If you get it, great. If you don't, hey, wait for another trade setup. All right. That right there, ideal trade setup. All right. With what you waiting for a price to hit the low of London session, and you can close out a partial of your trade as well as and then hold to see if it goes the rest of the way. So if you close out a partial, let's say 50% of your trade here, 80% of your trade here, and then you put stop loss and profit and let the rest ride. All right, and let's go see how this thing played out. All right, there's 8 o'clock. Boom, got the retest. Got the retest where we want it. Barely any drawdown, and there goes price. TP hit. Boom, and let's stop. All right, so we got a retest here at 8:03, and it hit the full TP 8:36. So in 33 minutes or less, you caught 142 pips. All right, beautiful sell-off. All right, so that is how you take everything you just learned and you frame it into an actual trade idea, and then how to sit there and wait until what? Trade execution, which you should be trading, executing after 8 a.m. Central Standard Time. Hopefully this video made a lot of sense and it allowed you to put everything together for you. All right. I'll see you guys in the next video.